Hello, traders. Gary Wagner here. Approximately 12:40 in Honolulu, 6:40 in New York on Wednesday, 20th day of October, 2021. And this is the Daily Report for Gold and Silver. One word to describe today's upside move, about a $12 move in gold, 2% move in silver, is inflationary concerns once again reemerging. You might ask why they're emerging when the numbers came out exactly a week ago today. Three words for that one: Paul Tudor Jones. The legendary billionaire and hedge fund trader had an interview with CNBC in which he talked about inflationary pressures, how he doesn't believe that they are as transitory as the Fed believes, and how they could lead to an economic issue further on down the road. We covered that in detail in our opening letter. In the case of today's moderate to strong upside move in gold, it was a direct result of rekindled concerns about inflationary pressure. The question becomes, since the data for September's inflationary numbers, which are at 5.4% year over year, came in exactly 1 week ago, why was the concern raised today? It was due to one man, Paul Tudor Jones, a billionaire, large hedge fund manager who correctly predicted the crash of U.S. equities in '87. Now, he said that Fed policymakers are inflation creators and not inflation fighters. And he had a dire warning. In essence, what he said is that the number one issue facing Main Street investors is inflation, and it's pretty clear to me that inflation is not transitory. It's probably the single biggest threat to certainly financial markets, and again, probably, I think, to society just in general. These are just some of the statements he made during an interview on CNBC today. Gold closed higher by $12.30. and is currently fixed at $1,782.80. Now, the dollar did provide some mild tailwinds, giving up 0.12%, but when we compare that to today's gain in gold futures, which is 0.69%, you can see the vast majority was due to market participants bidding the precious yellow metal higher. With the exception of palladium, which lost 1.61%. The other three precious metals, which trade on the futures exchange, all experienced gains. The star today was silver, though. That gained 2.02%, and after factoring in today's increase of just over 48 cents, the December futures contract of silver is currently at $24.36.5. This first chart that we are looking at is a daily candlestick chart in Heikin-Ashi format, meaning that the open is created by fixing it off of the midpoint of the prior candle. It is our best indication to take a look at trend and, more importantly, strength of trend. In the case of what we're looking at now, what we can say is that we have seen the market in an uptrend, but there's really no strength to it whatsoever. But we'll get a much better indication when we convert this chart into a standard Japanese candlestick chart. Traders, we're looking at a standard candlestick chart of gold. One of the most important things that I am looking at right now is the fact that we have seen a compression of sorts, in that we have had a series of lower highs and a series of higher lows, a compression triangle, and we are getting very, very close to the upper level resistance line and close to the apex of this compression triangle. A breakout above that would be significant to me. We're currently trading at $1,783, and we have our triple top that we talked about. That occurred back in 2012, but it also occurs at $1,800, which is a key and critical psychological level. And that's a key and very important level to watch. However, there's a big caveat, and that is, as recently as Thursday of last week, October the 14th, gold challenged that particular price point and was ineffective in either closing above it or sustaining any kind of even sideways trading action. In fact, what happened is the market fell back down to approximately 1760. Now, considering that this rally began at 1720 during the end of September, beginning of October, we did see a rather sizable move to the upside. We got our retracement, and the question is, will we see gold challenge this again? If it does challenge the upper level resistance line and on a closing basis move past $1,800 per ounce, we would then look at various levels of resistance. The first level comes in at around 1830, and these are projections that are simply based upon tops in the market that we have seen. And you can see that in the case of what happened in September, is that it challenged it, did not effectively close above 1840, and that was the beginning of a correction that took gold pricing back down to 1720. So that's a key number, but a break and close above 1800, I believe, would take gold to about $1,840, and that is the levels of resistance I'm looking at. In terms of what I'm looking at in terms of support, we have our first minor level of support, which comes in at 1,748, and that is really based upon this low here as well as these lows right here. I think that our major support levels come in first at $1,720, and that is based upon this bottom right here. And then, of course, our major support level, and I don't think we're going to reach it, but if we do, that would come in at around 1680. It's based on the double bottom that occurred in March, as well as the bottom of the flash crash. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.